Okay, so here is chapter 3. So again, this is going to be all about transactions. We're going to learn about transaction analysis and how to interpret a transaction and utilize the concepts that we just learned in chapter 2 and apply it to a journal. Okay, so first things first is going to be introducing to what a chart of accounts is. So this is a typical what a typical chart of accounts should look like. It should be in order based on account type. So your assets are going to be at the very top. Your liabilities comes next. Your equity comes after. Your revenues are after that, and then lastly is your expenses. Okay. Now, you can or cannot have. You can or if you'd like to. Let's put it that way. If you'd like to use account numbers, they generally do kind of help. The general overall concept of determining which accounts to place information in. But some companies actually don't use account numbers, so it's not really necessary to have. But if you do have an account number, it's usually based on a sequence number that kind of gives you some kind of way to be able to differentiate the account types. So for example, in this one, we have our assets. They're going to be our 10,000s, okay? Then our liabilities is a 20,000. Our equity is a 30,000. Our revenues is a 40,000, and so on and so forth, okay? So that's just a and it doesn't have to be like a number. It could also be a sequence if that makes it feel better, like easier for you. So you could use a combination of numbers and letters. So if it's easier for you to start with all your assets as A100, then you go ahead and do so. So as long as you keep a sequence or keep some kind of consistent form of listing out everything, okay? But typically what the chart of accounts does is basically it's a list of every single account that is going to be that exists in your books. And these are typically the accounts that you're going to be utilizing. So it is your go-to, especially if we are learning to become the bookkeeper, but the accountant is the one that creates the chart of accounts, okay? Now, for instance, if you are a small company or a small business, some of these things are going to have to be built upon over time. But if you've been in business for a long time, then it's pretty straightforward of what accounts that you will need and what you will use. Okay, but for most beginners who are learning this, it's kind of like a built-on process. Like, okay, maybe this time I'm buying this, and if I buy this, then I need to create an account for it. But generally, rule of thumb, it's usually generated by the accountant themselves. So they have a clear idea of what accounts that are necessary to operate a business or that you're going to be using for the business. So that's all it really is. Some chart of accounts actually have account balances, so you're able to see it. But in this case, all I'm really looking for is for a transaction. Does an account exist for me to place and sort my information? And if it does, then I'm going to look what number is associated or what account name is associated exactly to that thing. So when we talk about journalizing, which is going to be in this chapter, you need to be very specific on the account name, and if you use account numbers, account number as well. So you guys don't get confused or anything like that. So oftentimes that you'll see that for beginners, most beginners, they'll create multiple accounts that essentially do the same thing just because they can't remember what they've already created. For example, they put entertainment, they put meals, and then they have an account called meals and entertainment. So something like that is a common mistake. It's not wrong that you do that. It's just, again, like, especially when you're dealing with accounts like these, you want to also ensure that you don't have any repeating accounts or accounts that are similar that you can concise and combine them together. But that's what it is. A chart of accounts is just a long list of every single account that exists and that you're going to potentially use to journalize. Okay, so this has to come first before journalizing, period. Okay? So now we're going to talk about the general journal. So there's a few things that I need you guys to learn about what a general journal is. Now, first off, what is the definition? The definition is it's pretty much a book that you keep all your records of transactions for. Straightforward. There are multiple books that you can have, especially if your company is very, very specific in their transactions. Maybe they have just a book for just sales only, a book for just purchases and inventory only, and then they have a general journal that does everything else. But in this case, for this class, because I don't want to confuse you anymore, plus the limited space that we have on our computers, I don't want you to have like 10 million spreadsheets open. I'm going to have you guys focus on one journal and one book only, and it's just going to be called the general journal. So this is where every single transaction that you want that incurs in your company is where you're going to place all the information. Okay, so including all sales, all purchases, all orders, all expenses that you need to incur. Okay, we're only going to focus them all in one book. Now, how the general journal is actually created or how you enter it in. Everything is going to be in chronological order. So the day it happens, you record it. Now, a lot of times what happens is, well, what if I forget to record a transaction from that previous day? That's fine. You can, as long as you record it, because the number one thing is you never want to have holes or gaps in your transactions or in your trial balances and et cetera, et cetera. Now, what that entails is, like, if you do forget to place something in exact order, all you have to do is just place it in whenever you remember that day, and at the note, which is the one that's in parentheses, and you can either italicize it, you just note that this transaction happened on that day. But it should be generally in chronological order. So oftentimes when you do bookkeeping, you're doing it on a daily basis. You're not doing it on a week-to-week basis. It's daily, okay? So everything is in order, okay? And it's in order from whatever transaction comes first, okay? General rule of thumb is just like whatever happened, record it that minute or that day of, okay? Or if not, collect it, and when you have the time to journalize it, then journalize it in the order that you've set it in a pile, okay? So with that, other things than that, the next part is the actual description. Now, the description is going to entail your account names that you get from your chart of accounts, and it's also going to contain your description as well of what the transaction is. Now, oftentimes, if you're the sole bookkeeper or sole accountant, you can get away with this by not having description because again, when you have this, you have to have your source document either attached to the journal or whatever whatsoever. But with that being said, if you're one person out of 3 bookkeepers, you generally want to actually put a description because it just helps other people that look into your books to understand what happened. So how the actual accounts are listed in here is rule number 1 is debits will always come first. Okay. Now this is going to be difficult if you, especially when you're a beginner at journalizing, is how do you know what accounts are debits? So that's where you're going to have to analyze, sort it ahead of time, and then journalize it. But for this class only, you guys, I know it's going to be either your first or maybe your 10th time doing this. There is room to make mistakes, okay? I'm going to allow you to make the mistakes because you can. This is for learning practices only. So I'm not going to fault you if you put your credit first, but just know that this is the rule of thumb, especially when you're going into actual professional, like going into an actual company that does this for a living. You definitely want to know that debits will always, always, always come first. Okay. So with that being said, debits come first. So that means what comes after. Now it needs to be a debit, 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 and then a credit, credit, credit. Okay? It doesn't mean debit, then credit, then debit, then credit. No, it has to be all of your debits come first, and then after that, all of your credits come out. Now, when you're journalizing, a key, an easy way to understand or an easy way to just look at it and just know exactly where everything is placed in is that generally your debits are going to be left aligned on the page, okay? And then what's going to happen is your credit is going to be indented. So that's going to show you when you pull up, a general journal page, you can automatically, looking at from afar, you can tell which transactions come first, and then obviously you can tell which ones are your credits. Okay, so that's a rule of thumb there too. Now, and then lastly, the description will come right at the end of everything. Once you've listed all of your transactions or listed all of your accounts on there, that is where your description is going to come into play. And a big significance is that you don't want to just type it in there. A good way to indicate it is by putting them in parentheses, okay? Just to give yourself a note. And your note can be as long as you want. You can explain to your accountant exactly the exact details of this transaction. But general rule of thumb is you don't want to also utilize too much journal space either. So a key thing that you would want to do is typically for a transaction, you'll have who the vendor was, what did you do, if it was for like rent. Okay, so if, for example, down here I paid rent, right? So you could say I paid rent for 3 months, and I use a check number, 150. Okay. You can even go more specific by adding the vendor's name because, again, you can pull up the check and you'll know who your vendor is. But, just for other people, because you might have other properties that you need to pay rent for, such as like you have your store location rent, so you have to pay the building manager, but you may have a facility, a warehouse that you rent to. So you may want to be a little more specific. Okay. So again, short details. Don't make it too long unless you feel it's necessary to explain so you know exactly what this transaction is. And it does help too because if you're especially if you're doing this on a day-to-day basis, after you've done the first couple transactions, you flip the page over, you're not going to remember what you wrote on the previous page. So, it's also a rule of thumb, like it's best that you leave a description so you can actually kind of remember, oh, did I write this transaction? And if you didn't, you can always go back in your book to see if you did record it or not. Okay, so that's always a good thing. So the more descriptive, the better, I would say. But again, you don't want to clutter your general journal too much with like impactful data, like not too much. You don't need to write a whole paragraph for this transaction. It's just pretty straightforward. Okay. Then the next section after that is moving on to the post-reference column. Now, on your journal, your post-reference is going to be the account number that you use that you can get from your chart of accounts. Now, of course, if you don't use numbers, then you can leave this blank. Okay, so the post-reference for your journal is to make sure that you put your account number. Okay, and that's pretty much it. And then as far as understanding when you debit and you credit your accounts, rule of thumb is your total debits must equal your total credits. So for example, the first one, right? I bought furniture with cash. Okay, so I recognize that I gained an asset, so I increased it with a $500. but I've also spent the cash. So I have to decrease my account by $500. So here is an equal fair trade right here. Simple. Whereas the second example kind of breaks down the exact amounts. So for example, this one says I'm paying for the current rent and I'm also paying rent in advance. But obviously they're not going to tell me, "Oh, pay every month." They're going to tell me to pay all of it at once. So here is where I break it down. The first month is $500. And then because I'm paying for a total of 3 months, that means I still have left $1,000 since it's $500 a month. I have 2 more months to pay, which I paid $1,000. And then my total amount that I paid was in grand total of $1,500. So this is the concept where your debits must equal your credits apply, okay? Because again, you can pay with one account and divide it amongst everything that you need to list out as far as your debits or whatever your credits is. So it's not, you don't need to separate each transaction because that's also going to, utilize the spacing in between your journals. So, but again, for beginner practices, I wouldn't say it's not wrong if you did rent expense for this month and you paid with a check and then you created another transaction saying, well, here is the prepaid rent that I paid for rent in advance and here's the separate checking. Essentially, that is the same thing as this journal right here, okay? But it's not wrong. It's actually correct as well, but it's just a matter of fact of condensing your information and condensing the transaction, okay? So that's as far as that. That's it. Any questions in regards to understanding how to journalize a transaction? Okay, we will get to take a look at this and also practice it on the exercises. So don't worry about that either. Any questions? Okay then, so now we're going to be moving on to what transaction analysis is. So before I get started, Chapter 2 was how to categorize it. Chapter 3 is now how to actually post it into the journal, actually journalize it. Now, this is the section where I was talking about how we determine whether this transaction is even something you need to journalize. So here you go. Here's the 7 steps to transaction analysis. This is going to be very, very helpful to you, especially if you are a beginner at journalizing or you just need a refresher, okay? So these are the 7 steps that you need to take. Number 1 is when a transaction has occurred or incurred, right? You need to recognize this transaction, okay? All right. And then we need to also identify, does this transaction affect my business? Okay. Does you buying a cup of coffee affect your business? No. If you want to apply it that it affects your productivity, then you can justify it however. But is that coffee truly necessary for the core business of your company? Then if you say no, then there's no point to even record it, okay? But let's say you go out and you buy coffee because your company sells coffee, then yes, that is definitely going to be something that affects your business. So that's number 1 is going to be trying to determine whether this transaction affects your company, all right, and what you do with it, okay? So usually typical things that you would normally see is that you have a proof of transaction. So paper trail is very, very important when it comes to business. So whether you wrote a check, whether you have an invoice or any receipt that you received, or you mailed out a bill or a statement to somebody. So again, those are going to be considered your source documents. Those are the proof of a transaction has occurred. Okay. Then number 2 is understand how the transaction or the event affects the business, which I just talked about. So once you determine that the transaction has happened, now it's actually understanding how does this affect the business. So again, I talked about buying coffee for your core business. Now you have a receipt that proves that the transaction has happened. So therefore, how does this affect the business? It affects the business because 1, you need to use your money to buy the coffee. And 2, this coffee is going to be considered inventory, which you plan to sell out to the public. So therefore, there's a huge chain of reaction when it comes to this particular transaction. So yes, it does affect my business, and it affects it because it primarily is my core operations. Okay. So once you determine that, then step number 3 goes, well, what accounts are going to be affected, whether the transaction has increased or decreased a specific account. So then I talked about I need to increase my inventory and I need to decrease my cash flow because I needed to spend the money. So in this case, I've determined, okay, I bought coffee. Coffee is inventory. How did I buy the coffee? So there's those 5 things I talked about. The what has happened, when did it happen, why did it happen, and how did it happen? So there you go. I plugged it all in. What happened? I bought coffee. Why did I buy coffee? Because I needed to run my business. How did it happen? I went to the store and bought it. How did I pay for it? I used cash. Okay, so those are usually going to be key factors to help you organize your information. So it's a lot of analytical, a lot of analysis when it comes to understanding, is this transaction even something that you need to record? Once you've determined and established some kind of mindset of which accounts you're going to place them in, that is where you're going to go ahead and use the number 4 is use the business chart of accounts. Look up to see if those accounts even exist. So of course, general rules, your number 1 asset is going to be your checking account. So there you go. You have your checking account. After that, if you are in the business of selling merchandise, you should automatically have inventory. So those are the 2 accounts that should be on your chart of accounts. If not, then you need to create one. Okay? So once you determine that you do have those accounts, or if you need to create one, then the next step is going to happen. You're going to be utilizing the debit and credit system. All right? So again, we talked about the flow, the nature of accounts, right? We understand what we're doing here is we're trading an asset for an asset, right? We're purchasing inventory, which is considered a current asset. But in order to purchase it, we need to lose some of our current asset, right? We spent our cash. So in this kind of sense, you're going to have to use the debit and credit system and determine, okay, well, if I bought $500 worth of coffee, right, then $500 is going to be increased in my inventory. However, I need to decrease my asset because I spent the cash, so I need to decrease my checking account by $500. And there you go. You determine which and where your debits and credits go. Now, after you do that, now the next thing is determine which book you're going to use. Again, number 6 is going to be eliminated just because we only have one book and we're only going to use one book, which is our general journal. But for example, if you are in a company that has multiple books, you need to find which one it actually belongs to. So if it's an inventory book, you got to put it in the inventory book. And then lastly, step number 7, just what the Nike logo tells you to do it. Okay? Just do it. Okay? Just journalize it, and that is your 7 steps of transaction analysis. Okay. So in this kind of cycle or steps in order to record a transaction can be tedious if you do not know how to start off in the first place. Okay. But of course, with repetition and time, eventually you'll get quicker at this and you'll be able to look at it, determine it really quick, and you don't have to refer to these 7 steps ever again because it just becomes second nature to you. But again, if you are a beginner, I would highly recommend you to print this specific slide out because it will help you determine exactly how to journalize a transaction. Okay, and it does have a lot of thinking, and it does you have to go back and think about what you did. So, yes. Any questions in regards to the 7 steps of the transaction analysis? No? Okay. I shall move on. So the next part is going to be understanding correcting entries. Now, with correcting entries, did you have a question? No? Okay. So when we understand correcting entries this is probably the best way to go about this. Okay, so I understand that if you guys haven't done bookkeeping in a long time, or if you guys forgot, or if you're new to this, this is where your best friend's gonna come in. Okay, this is where your best friend's gonna come in and save you. So what I mean by that is there are rules to when you are working for a company, that when you make a journal entry, you want to try to avoid making mistakes. Now, of course, we're all beginners in this level. Okay, I'm assuming that everyone's ground zero, and you guys don't know how to journalize a transaction. So this is where you can make as many mistakes as you'd like. Okay, I'm not going to penalize you for this. Okay, you're not going to be a professional bookkeeper at the end of these 15 weeks. However, there are rules and guidelines that you should know so you can kind of, generate the idea before doing your action, okay? So there are a couple rules, such as, especially for manual bookkeeping. If you're doing paper and pen, that's probably the worst one that you want to be very, very, very careful about. You cannot cross out, eliminate, delete, scratch out, white out. You cannot do any of those things if you make a mistake in your books of transaction. That is going to be 100% speculation for fraud. Okay, so that's how a lot of companies, they want to try to cheat the books, or cook the books, they call it, by writing in or squeezing in transactions that would normally not exist. And it could be very, very, very tiny that a lot of people don't actually view it unless they get audited. Okay, so it is very, very, very important that you understand that if you're doing manual paper and pen, then you want to try to avoid making any scratches, scratching them out, whiting them out. You want to avoid that at all costs, okay? But because we are now in the days of technology and we use computers, that is okay for you to press the backspace button. No one's gonna know because, again, a lot of people, they write typos all the time. So it's not a big deal when it comes to this. Now, obviously, if you are submitting this to your accountant, and let's say you did make a typo, that is, whether it's you fat fingered a number by accident, then that is where you're going to have to actually create another journal entry to either to fix the mistake that you've typed in, okay? So that is why we have two different types of methods when it comes to correcting journal entries. Now, the easiest one is going to be the reverse and re-entry. And this is the most common one, especially for beginners, or just so then it's visible to you. Okay, so this correcting entry is basically going to return return the product, or re-enter or reverse the transaction. Okay, and then you're going to re-enter it with the correct amount. Okay, so I'll talk about an example of this in a second. Whereas the second version is going to be called error cancellation. This is where you are going to look at your mistake journal, and you're going to compare and try to analyze it. How much did you overstate, or how much did you understate? Meaning, how much did you what was what was the error? Did you place it in the wrong account? Did you meant to say 63 instead of 36? Did you flip a number around? So that is where that little mindset's going to come in, and then you're going to correct it by adjusting the entry to according. So, for example, okay, we'll go over an example actually in class about this exact one. But this one only requires one entry, and that entry is to adjust or to correct the amount that's supposed to be in the actual account itself. And I'll talk about that. We have examples after this. So again, reverse and re-entry is example number one, or type number one, and then the other one is going to be the error cancellation. Okay, so let's go ahead and move into the first one. So the first one is going to be the reverse and re-entry. This is commonly used, okay? So number one, all right, the example says that you on September 15, you actually went and purchased office supplies with cash in the amount of $65, right? Sales tax is included, okay? But you recorded this transaction as $56. All right, now correct this entry. So in this case, my total amount should have been 65. But maybe it was the end of the day, I'm tired, and I didn't pull the receipt out of my pocket. I just wanted to journalize it. So here you go. I journalized it, and it's for $56. So I'm under my account by $9. Okay? Now, that's just us thinking about that. Now, in this kind of concept, I want you to understand it like this way. So we purchased the supplies. You have the receipt. It says 65, but you wrote 56. So how are you going to do the reverse entry is you're going to go and in your mind, return the item. You're going to return the item. So in this case, I'm going to return my office supplies and get my cash back. And that's exactly what you're going to do. You're going to return you're going to get the cash back, and you're going to return the office supplies for the amount of 56, because that's what you purchased it for. That's what you recorded it as. And then after you've returned it, now you're going to go and buy it back. So then now you're going to buy it back for the office supplies, and you're going to spend the money, and it's going to be for the correct amount. So this is the reverse and re-entry concept to fix a mistake that you've incurred in your journal. Okay, so does anybody have any questions in regards to this? Okay. So again, we made a mistake in our journal. So how we view it is you're going to reverse the transaction, and then you're going to re-enter it with the correct amount. Okay, so I bought office supplies. I returned it to repurchase it again for the correct amount. And that's exactly how I understand this transaction. So if it helps you to understand it this way as well, you may do so. Okay, so reverse and re-entry. It's the easiest way, and it's also the cleanest way too, because that way, you know, when you're doing this, you're actually reversing it, you're returning it for the full amount, and then you're re-entering it in with the correct amount. Okay. Now let's look at error cancellation. Okay. Did I not? Okay, so error cancellation, right? Now, this is where you actually have to do quite some thinking. So this is more for advanced users of advanced users of of accounting. Like if you've done this for a long time, you know exactly what to do. So here again, I kind of discussed briefly about it. I bought originally office supplies for $65, but I recorded it for 56. So this is where I have to think really hard, okay? And this is where I'm saying, well, in this case, I understated my office supplies, meaning I only put $56 worth in there. I need it to reflect 65. So what is 65 minus 56? That is $9. So that means I am short $9 in my office supplies, and I'm also short $9 in my cash because, I'm supposed to have cash in my hand. I'm short by $9. So therefore, I can make an adjustment here and understand, okay, I need to increase my office supplies by $9 more, and I need to also spend or calculate my cash by also $9 to adjust. Okay, so now if I had my little ledger, which I'll talk about in a second, my office supplies now is going to be $65, and my cash that I spend is also $65. Okay, so this one again is for more advanced people who know and understand and know this mistake. But the one mistake is that oftentimes that we will see is that you may place it in the wrong account. You may accidentally put cash as a debit and your office supplies as a credit. You may even credit or debit the wrong amount. Okay, it happens. It's human nature, right? So this one does an extra thought. You need to think a little more. You need to think about, well, what makes sense? If I have too much office supplies or if I have too little office supplies, how do I fix it? And that's where you can make another mistake that you have to correct afterwards. So the best bet and the best one that you should use is going to be your reverse and re-entry, because this one gives you a clear depiction of what you're doing. It says you did the wrong entry. You're returning it, or you're reversing the entry, so it's zeroed out completely, and then you're re-entering it for the correct amount. This one's generally more widely used because it gives you a step-by-step recognizing the problem, how are you going to fix it, and actually fixing it. Where this one is kind of just, it's an adjustment. You're just trying to fix your mistake by, adjusting it to the correct amount. Okay? Any questions between correcting entries?
No questions.
Okay, perfect. So, T accounts. T accounts. It can be useful if you need to get a quick overview of how much is in one account. So, I don't really, this is only when we're journalizing and something's a little off, or you need just a quick balance of what you have in your, in a certain account. Again, it's just basically the account at the top, and you put a T. The left is your debits, and your right is your credits. So this is just finding a quick summary or a quick balance of what you have in your account. So again, this isn't something I emphasize too much in this class. It's only necessary to you if you feel this is the best way to keep track of your records. But in this case, it's just a concept that I know that a lot of accountants, some of them do this. They do it on the side of their journal. They just, could do a quick tally, but it isn't necessary for you to truly learn or truly understand, because we have what's called the general ledger, which is the next topic. But I just wanted to cover this just real quick, that if you do need to know where you're at in a specific account, you can go ahead and do that on the side. Just understand, okay, so this is what I started with. Here's my debit, here's my credit. I should have this much at the end of the day. That's pretty much it. Okay. But yes, the one thing I want to focus is going to be the general ledger. So we actually won't look into an actual example of a general ledger until we hit our fictitious business, just because what I'm going to do with the first 10 weeks is show you what your available options are to journalize, and then when we go to our fictitious business is actually applying that and piecing together how things work. So in this case, but I am going to let you know what a general ledger is. It's essentially the same thing as a journal, except you're going to have your running balances and know what your balance is at any given time. So for example, here you go, I have my cash account, right? I enter it just exactly like my journal. So if I debited my account for $150 plus $154, and then I spent money for $500 and then $65 for my supplies, my account balance is going to be on the outer right side, is going to give you another debit and another credit column. And this is where the normal balance is going to come into play, because if we normally know that the cash balance should be positive in the debit side, then that's exactly what this reflects. It's saying that I have enough money, and for every transaction that I do, so for example, if I started out with, I think I started out with $150, right? Or actually, what did I say? Sorry. So I started out with some kind of some money, and I've debited my account for $150. So therefore, I have $5,124. By me making my second transaction, that I increased my account by $154, my balance has now also increased $5,278. So it increased by the value that I've journalized it for. So this is going to come into play, especially when we do our fictitious business. So for now, I just need you to understand the difference between a journal and a ledger. The journal is a day-to-day transaction. It does not give you any information except for recording your daily transactions. Your ledger is going to reflect the same transactions, except it gives you an account balance at the end of any given transaction. So that's the only difference. One is just, you're just journalizing. You have your transaction. Your ledger, you have an account balance at every given time. Okay? So the ledger is usually always used with the journal. So then instead of doing your T accounts on your journal, you can always open up your ledger and you would know how much your amount is at any given time. And we'll get to practice that again. All right? So that is the difference between the two. Okay? And of course, the ledger and the journal are two separate books. Okay? They're never together. All right, so here's the course review. Again, we talked about what a chart of accounts is. We talked about how to journalize, okay? And we also talked about two things, which was the how to correct a journal, okay? And of course, I give you a little synopsis or a little summary of the difference between a journal and a ledger, and a little, sample of a T account, okay? Any questions in regards to chapter 3?
I got a question.
Yes.
If we use QuickBooks on reversing the entry, can we still use the entry and error cancellation method?
Yes, you can, and that's going to be considered an adjustment entry. So if you remember chapter 13, when we made our entries in there and we reversed, or not reversed, we entered in a transaction, you can journalize it if you need to fix it. And that's exactly what you can use the journal for in QuickBooks. If you made a mistake, let's say you did purchase it, but then again, remember, the thing about QuickBooks is you can also go back and fix the transaction at any given time. You can just go to the transaction and edit it. Okay? So you don't necessarily need an error cancellation or a reverse and re-entry in QuickBooks. QuickBooks can do it. You can fix it right then and there. Okay. Any other questions? All right. Okay, so let's go ahead and get started with our little exercise here. So, what is the chart of accounts?
It is the list with all accounts used in our general journal.
Good. A list of all accounts used in a general journal. Good. Right. What is a general journal?
It is the book where we put our daily transactions.
Good. A book or record of all of the daily business transactions. Good. Transactions. Okay. What is a general ledger?
It's a book of records of all the accounts.
Okay. Be more. What's the difference between a ledger and a journal?
General ledger show total balance.
Yes. Okay. It's a book or record of all accounts with account balances. Okay. Good. Number 4. Okay, what are the 7 steps of transaction analysis? So, what are they?
Recognize.
Okay, so
Recognize the transaction.
good. That's the first one.
Understand how the transactions affects the business.
Mm-hmm. Analyze, or I'm sorry, determine. Determine how the transaction affects the business. Good.
Determine the accounts.
Good. Analyze and sort. Okay, and what else? What's step number 4?
Use the business chart of accounts to determine what is it? Charts of accounts.
Yes, good. It's to determine which counts exist and which ones you're going to be using. Good. Step number 5.
Use the debit and credit.
Yes, debit and credit. And then step number 6.
You determine which journals you should use to record.
Determine which book to record. And then lastly, what is number 7?
Record the transaction.
Good. Do it. Okay, record the transaction. Good. Okay. Number 5, okay. How is the general journal recorded?
We record debit and the credits. Debit first.
Yes. Yes. Okay, so that's going to answer this question here. So this is more in a sense of when do you record the transactions? Okay, so this one is when recording the general journal, what goes first?
We
And you
record
said,
daily.
yes, daily. Okay, hold on. Debits go first. Okay, so record daily. Okay, in a sense, if you're doing it daily, right, you're going to place it in chronological order. Chronological order. Okay, so in order by date. Okay, and debits go first. Yes. Okay. At the end of at the end of journalizing, what must be true?
Debits equal credits.
Debits must equal credits. Yes. Okay. Number 8. Okay. What are the two methods of correcting entries?
Correct and reverse.
Say that again.
Error cancellation,
Error cancellation.
reverse, and the enter.
Um, comma, reverse, and reentry. Good. Okay. Number 9. Okay, so here I give you a chart of accounts. So this is where we're going to practice journalizing. So here is the number 9. Here is the chart of accounts. So you have cash. So the account number is going to be on the left side, and the associated account name is going to be on the right side. Yeah. And I give you the account name and what kind of account they belong to. So now we're going to practice the following to practice journalizing. So using the transaction analysis. So number 1, so I'm going to go ahead and try to shrink this so you guys can see everything. So hopefully that's okay with you guys. So number 1, okay, on January 1st, okay, you paid rent for $500 cash. So, what did I do? Okay, so this transaction for Shirley is involved with my business. So I can go ahead and skip down to step number 4. Step number 4 is use the chart of accounts. Do I have the necessary accounts to fulfill this transaction? Well, what did I do?
Rent expense,
You did a rent expense, okay? What else accounts did I use? Cash, okay? So in this case, now we need to understand if I paid for rent, now we're on step number 5, using the debit and credit system. If I paid for rent, how am I going to organize my debits and credits?
debit, rent expense,
Debit, rent expense, good. So let me go ahead and practice this. So January, what is it, 1st? You paid for rent expense. Okay? So you're going to debit your rent expense for 500. Okay? What is my equal and opposite debit in this case? So what did I do? We're going to credit cash.
Yeah, cash credit.
Yes, because we spent the money. We no longer have the cash in our hands. We spent it. So therefore, we're going to decrease my cash account. So therefore, it's going to be for 500. And what account number is cash is 100, account number 100. And my rent expense is going to be account number 660. Okay, so that's how you journalize a transaction. And if I wanted to, my description could be is I paid for rent. Okay? As long as it's in parentheses, that's your description. So there you go. A perfect example of how to journalize a transaction. Okay? So let's go ahead and do the second one. So the second one is on January 5th, you purchased inventory, 100 items for $1 each with cash. So let's look at our options here.
So you put inventory and debit. It's
Good.
150. It's
Uh-huh.
150.
Good. So, yes, we're trading an asset for another asset. So on January 5th, we are increasing our inventory by is count number 150. Okay. Now, how much am I actually making? How much am I purchasing for inventory?
100 items. It is mean $100, right? One
Good.
each.
Correct. It's going to be for a total of $100. Okay. Now, what is my equal and opposite account that I need to use to reflect the same amount?
Cash.
Cash, yes, because again, we spent the money, so therefore we're decreasing my asset by another $100. All right. Next question here. Example is January 8th. You purchase a machine for $750 cash.
So debit equipment.
Good. Because a machinery is considered an equipment. Good.
Then credit cash.
Good. So was that 160? So on January 8th, we're going to debit equipment. 160 for 750. And we're going to credit our cash. And then I forgot a description up there. So let me go ahead and put a description there. Okay, so that's the thing about this too, so we can edit and be able to fix our mistakes. So here, inventory, right? I'm going to write purchase 100 items at $1 each. Okay. Where this one is, we bought a machine with cash, so purchase a machine. Okay. Now here's the next one for January 10. You purchased supplies of $56 and on an account. Okay, so what does this mean? So we're gonna debit supplies, good, because we're purchasing an asset.
Then credit accounts payable.
Yes, because the word keyword here, this is what you're gonna see very often is if you put something on an account, in other words, what can you determine out of this? If you put it on an account, did you pay right away?
Liability.
No, you're owing somebody. Correct. If you place it on an account, that means someone bought it for you, or you're owing them. So in this sense, accounts payable is correct because again, it's accounts, and you owe it. So general rule of thumb is like most accounts that you have that you owe other people, you just simply would place it in accounts payable. So accounts payable is 200. And you got it for 56. So January, was it 10? Yeah, January 10,
8. No, you're 10.
you purchased supplies and you placed it on and you placed it on an accounts payable. So you owe the money. You didn't pay them right away. All right, accounts payable is 200 and this one supplies is
110.
110 and you paid $56. Okay? All right, and then I'm going to go ahead and right here, purchased supplies. Right. Now the next one here is going to be a January 12th, you had cash sales of 25 toys for $5 each, no sales tax. So what happened here?
So you put the sales credit.
Sales is
120
credit. Okay, good.
revenue. It's
Oh,
410, right? Account.
revenue, sales, I should have. Yes, sales is 410. Good. Okay.
So 25 toys 5 is 125.
Correct. Okay. And here, what did you receive?
Cash.
Cash debit.
Yes. Okay, so this is how you just did right here. It was partial of transaction analysis. You recognize that you did a sale first. However, you also recognize that you have to credit it. So in rules of journalizing, we cannot put sales first, right? Because we know that concept of understanding that debits come first. So this is where you had to complete your thought first and understand that cash is going to be your first thing because you're receiving cash, you're increasing the money that you have, and you recognize that sales is going to be is going to be it's going to be a credit balance. You recognize that first. You said 440, and you said it was 125 because it's 5 times 25. Good. And no sales tax. And we'll talk about that when we move into next week, when we actually start dealing with sales and purchases, okay? So again, sold 25 items at $5 each. Okay? So good. So that is that. Let me go ahead and extend my journal. So the next one is the last one, is January 5th. You borrowed $5,000 from the bank. So what does it mean that you borrowed $5,000 from the bank?
Loan.
It is a loan. Good. Now, how are we going to use the debit and credit system for this one?
Debit cash.
You're going to debit cash because if you're borrowing $5,000, what are you going to get? You're actually getting money out of it. So cash will be debited. Good. And then what's my credit going to be?
Accounts payable.
Not accounts payable.
Your value. No, the value.
Liability.
It's a liability,
Notes payable.
not a notes payable. There is no notes payable here.
Loans payable. Loans payable.
Yes, you have loans right there under liabilities for your chart of accounts. So right here, loans is 250. So that's the last thing that you're going to place here is on the 15th. You increased your cash because you borrowed money. And the way that you borrowed money was through a loan. Okay, so 100 and 250. And it was for $5,000. All right, so there's actually one thing I forgot to mention to you guys as well is when you're journalizing. Rule of thumb is, for example, when we bought our inventory, why is it that we didn't put the number of toys that we bought? Your journal is going to always reflect in terms of dollar value. So everything that we did, transactions, your debits and credits are going to reflect as dollar values. So that's why for inventory, I didn't put just 100. I actually calculated if it cost me $1 for each item, then I multiply these two to get $100. Okay, so make sure that you guys understand that in terms of journalizing. Okay, that everything stands as a dollar per dollar when you journalize it. Okay, so debits and credits are basically dollars. Okay, so we have one more part that we need to finish up and then we'll call it a day. So number 10, using the transaction on January 10, okay, from above, okay, you recorded that the supplies was for $56, okay, but then on January 20th, you realize that there was an error and that the supplies were actually for $65. Okay, record the error using both methods. So, which method do you want to use first?
Reverse and re-entry.
Okay, so let's do the reverse and re-entry. Okay, so the first one's reverse and re-entry. So the day that I found out was actually on January 20th. So I have to put the correct date that I found out my error was this. Okay, now first things first is if I originally journalized it as supplies. All right, let me find my transaction here. So I journalized it originally as I gained supplies and I put it on account. Okay, so how do I reverse this transaction?
Debit accounts payable,
Correct.
and then credit supplies.
Good. So I'm going to reverse it by returning. Okay. So accounts were payable, which account number 200 for the $56. And I'm going to also reverse my supplies for also $56. Okay. Oh, I'm in the wrong. Actually, no, this column isn't supposed to be here. Okay, so then, and I'm going to reverse the transaction by entering it in like that. Good. Now, how do I re-enter in with the correct amount?
Debit supplies,
Good.
65. Debit accounts payable, 65.
Good. And I'm going to write a little note here to correct error on January 10. Okay. So there you go. That's the first one, which is the reverse and re-entry. Okay. So let's go ahead and practice the second one, which is the error cancellation. Okay. So, let me go ahead and write error cancellation. Okay. So let's look at my scenario again. If I originally purchased my supplies, right? I recorded it at $56. And then and then I found out on January 20th that actually I bought it for 65. Okay? So how do I fix this one? Is my supplies over or under?
Under.
Under. So how do I fix this? Do I need to add more supplies or do I need to subtract some more supplies?
I'm gonna add.
We're gonna add it. So that means my supplies, I need to add more supplies and I need to add more to my accounts payable. All right. Now, how much do I need to add this by?
$9.
How many?
9.
$9. Yes. So this is the exact example I used in the actual PowerPoint. So good. So then same thing here. I'm all going to enter in to correct the the error on January 10. Okay, and that's what you have to do. Make a descriptive note. Okay, so here you go to correct the entry on January 10. And this one is using the error cancellation. We found out that I'm supposed to have more in my supplies than what I originally placed in there. So good. Okay, good job, everybody. So that is chapter 3 for you guys. I'll post the answers right after class. Other things that for homework is going to be reading chapter 4 and chapter 4 only. Next week we're going to be diving into inventory, and I'll post everything up on the over the weekend. But so for tonight, read chapter 4. If you don't have any other questions in regards to chapter 3, you guys are free to go.
Have a great day.
You too.